Welcome to The Explainer. Today, we're breaking down a really powerful argument from Trading Mindset Lab, and it's one that completely challenges how most of us think about trading success. Okay, so let's just dive right in. At the heart of this whole idea is this one single provocative number, 90%. What does it mean? Well, it's a claim that might just reframe everything you thought you knew about the markets. And there it is. This is the core thesis. The idea that your starting point, your entry, is overwhelmingly the most critical factor in whether a trade works out. We're not talking about being slightly off here. We're talking about that very first click of the mouse deciding the entire war before it even begins. So, what does this 90% truth actually mean in practice? And why would it matter more than all the things we hear about constantly, like money management or trading psychology? Let's break down why that first move you make is, well, pretty much everything. A bad entry puts you at an immediate, and I mean immediate, disadvantage. This analogy is just perfect. From that moment on, you're not fighting to win anymore, you're just fighting to survive. Your game plan is out the window, your advantage is gone, and you're just trying to get back to even. You know, this idea flies in the face of conventional wisdom. We're often told to balance these three pillars equally, right? But the 90% truth argues that a good entry is the actual foundation that lets the other two even function. Without it, your perfect risk management and your ironclad psychology, they're just patchwork fixes on a position that was doomed from the start. Now, this wasn't just some theory pulled out of thin air. No, this was a lesson learned the hard way, through painful, real-world experience. So let's look at the anatomy of a bad entry and the kind of lessons that are more often than not paid for in losses. So the source gives us a couple of classic examples here. First, trading gold. You see what looks like a strong bounce and emotion takes over, but you're completely ignoring that the main daily trend is still pointing down. Or trading stocks. You get impatient and you just jump into a choppy, sideways market with no clear signals, just because you want to be doing something. Both of these are just fundamentally flawed entries with pretty predictable, painful outcomes. And this is so crucial. It's about how an entry feels, right from the very start. A good entry? It's like setting out on a smooth road with the wind at your back. It gives you confidence, some breathing room, but a poor entry? That's like starting at the bottom of a steep cliff. It's exhausting from the first click, and your odds of success just plummet to almost zero. Let's keep going, because this initial mistake, it cascades into a much, much bigger problem than just losing a bit of money. It actually triggers a psychological domino effect, where that one bad click can totally destroy your mindset for the rest of the day, or hey, maybe even the whole week. See, a bad entry kicks off this totally predictable and, devastating chain reaction. First, you start to doubt your system. Then, you start to doubt yourself. And from that place of doubt, revenge trading starts. You desperately try to make the money back. And at that point, forget about it. Your calmness, your discipline, they are long gone. And that's the thing. That initial mistake has this compounding effect. It's almost never the one bad trade that blows up an account. It's the series of reckless ones that it inspires. That one little grain of sand brings the whole machine to a grinding halt. Okay, so we've laid out the problem pretty clearly. But how do we solve it? Well, the source distills all these painful lessons into a clear, actionable formula for success, a way to build a real professional's framework. These three golden principles, they act as a really strict filter. First, always, and I mean always, follow the larger trend. Are you swimming with the current or are you fighting it? Second, wait for clear confirmation. One green candle is not a trend. And third, and this is so important, choose the entry where your risk is the smallest. A good entry isn't where you're guaranteed to win. It's where losing costs you the least. And these principles, they're built on a foundation of three core pillars. First is structure, understanding the bigger market picture before you even think about an entry. Second is discipline, just following your rules without exception, even when it's boring. And finally, adaptability. You got to recognize that markets change, and your strategy has to be able to evolve right along with them. But here's the kicker. Even if you have the perfect formula, the market has one final, brutal test for every single trader, and it all centers on what sounds easy but is incredibly hard, the active skill of doing nothing. This is where the source completely reframes what we think of as patience. True patience in trading isn't just passive waiting around. No, it is the active discipline to wait while you're under pressure, resisting all those false signals, the boredom, and that incredibly powerful fear of missing out. It's a professional defense mechanism. This is the crucial mindset shift you have to make. A pro is like a fisherman, a patient hunter. They know that just thrashing around in the water out of frustration only scares the opportunity away. You have to wait for the catch to come to you. And this brings us to the final, critical takeaway that just flips a common fear completely on its head. Look, missing one trade is never going to ruin your career, but chasing one trade recklessly, that absolutely can. So ultimately, it all just boils down to this. The market is asking you this one simple question. Every single day, do you have the patience to wait? And how you answer that, not with your words, but with your actions, is what's going to determine your survival and your success.